Hello everybody. A little bit more than a week ago, the crypto markets experienced a very important event, a crypto flash crash. Well, let's have a look at how things are going now. Let's first look at the facts, and we're looking at the charts. What did the flash crash do on the charts of an altcoin, of Bitcoin, of Ethereum? And then we're going to think about what are the potential price scenarios now going forward. And at the end, we're going to look at a very explosive charting situation of the altcoins overall index. Well, let's see what are the facts. Well, on October 10th, we've actually seen the biggest crypto flash crash ever. It was a huge liquidation event on the 24-hour bar. It actually happened in an hour. During that day, 1.6 million traders got liquidated and 19 billion worth of leveraged crypto positions were liquidated. That is 9 times more than the previous record. The liquidation event was 19 times larger than the March 2020 crash. That was during the Corona pandemic, and I very well remember that that event back then. Now Bitcoin recorded an 18,000 daily candlestick bar from high to low. That represents a 15% sell-off from high to low. Now, what are the reasons? Well, the main reasons are excessive leverage and risk. On that particular day, we had a ratio of longs to shorts of 7-1. That is a very high ratio, so there was over leverage on that day. Plus, we had some liquidity issues and announcement. Trump had an announcement to put on 100% tariffs on China, and that announcement came 1 hour after the US markets had closed on Friday. So the weekend was on. Well, crypto markets trade throughout the weekend, but liquidity is very thin, and that created a domino effect of stop loss getting triggered, margin calls, and forced liquidations, and obviously a lot of price slippage on the crypto charts. Well, let's have a look at the facts here now. This is the over leverage. We can see longs versus shorts, way over leverage, and these are the top 5 liquidation events so far. 19 billion, 20 billion versus the second biggest event, 2 billion. Well, that's quite something. So let's have a look. What did it do? I mean, this crypto flash crash here, we can see this bar. What did it do to the charts? Well, let's have a look at the Bitcoin chart. That's the 18,000 bar from high to low. Well, this bar didn't close at the low, right? What we see here is a rejection bar. So it went down, and then the buyers came in and bought it back. Now in the overall chart of this day, well, we see this is an exciting event, but it did not do a lot of harm to this chart. What we see is, well, we got a test of the 200 moving average, the thick green line, and it held, right? It bounced off, and there's another test of the 200 moving average. Well, what did it do to another chart, to an altcoin chart? I'm just picking this one because the altcoin charts, I mean, they basically all look the same. We see price meltdowns between 50 and 80%. Now Ripple XRP, it had a price meltdown from 2.8 a coin to 1.4. Well, that's a 50% meltdown. Let's just bring this in, and that happened within an hour. 15 minutes to sell off, and another 15 minutes to recover. Well, that tells us that we have actually seen an altcoin derivative crash, because Bitcoin, it didn't do much harm. It's an altcoin derivative crash, and it's a bubble that got burst. Now, did it do, the overall theme of things, did it do a lot of harm? Well, this 1 hour event, flash crash event, well, we have to look at the higher time frames, right? This is the weekly and this is the monthly chart. And on the monthly chart, well, we can see this is just a pullback to the 21 moving average, the blue line. That is a healthy pullback in the overall theme. We actually have an S2 pattern here. Nothing excitable on the monthly chart, well, except that it was a 1 hour, right, event that created this monthly bar. Let's have a look now at Bitcoin in the 4 chart layout, because the patterns tell the story, and we have to look at multiple time frames. Now, daily chart, weekly chart, and monthly chart. What did it do? Well, actually not much, right? Here on the monthly chart, we can see how this sell-off, it actually held it found support at the blue line, the 21 moving average, and it's bouncing off. The bulls have not been able to push price to like beyond the 200 moving average. They have not been able to push it back to the very important psychological number, the 100K. So that is bullish, right? And on the monthly chart, well, we are still sitting on the 8 moving average and above the 100K. So nothing that tells us that the market is in a bear. Quite the opposite, because this is an S1 daily long pattern, and we're actually looking to get into this this long opportunity. What would be required? Well, we would need to see a daily bar that breaks this wick high, a daily bar that closes above this wick high, and then a next daily bar that breaks that signal bar. I actually want to get a little bit more confirmation when we look at crypto charts. Now let's have a quick look at Ethereum. Ethereum, well, very similar. We see an event that's actually what we call a test bar, right? These are important elements of our strategy. A test bar, that's a flash crash bar that touched the 200, looks good. That touched the 21, that's a requirement of the system, and this is our S2 pattern that actually formed on a monthly chart. So we've got a pattern within a pattern, and we're waiting to get a buy signal with Ethereum as well. Now let's think about what are potential price scenarios for Bitcoin and basically the whole crypto market, because Bitcoin has a market dominance of more than 50%. It basically sets the market type and dominates where the market is going. So this is a monthly chart of Bitcoin, and this current 5th exponential up leg started back here in 2023. Actually, my very first weekly Trader Insights newsletter was on this long-term buy signal. I communicated that quite openly, and it did really well. Well, based on this S1 pattern, right? Our target is 500,000. Well, will we get there to 500,000 now during this exponential up leg? Well, probably not, right? From 100 to 500, well, that's a long way. Why not? Because cycle studies indicate us that this exponential up leg will end somewhere around year end of this year or January of next year. So there's not many monthly bars left, right, to get up here. So the most probable scenario, you see it here, is A, then B, C, and D. So most probably we're going to see a stop run move above the 100K. That's a slingshot move, taking out all those shorts that think that Bitcoin should and cannot go above 100K. That's a technical move, a stop run move, and that should bring us into the 180,000 target area. It's nothing new. We've been talking about that for quite some time. I think this is still the most probable scenario because time is running out. Another scenario is that we actually get a pullback down to the 75,000 area, because in an exponential up leg, this 5th exponential bull, it's very normal to get 40%, 35% pullbacks of price, basically pulling back into the 21 moving average, and that would mean coming back to the 75,000 K. But again, time is running out, and that is my second choice. What could be as well is that this exponential up leg is over and we get a normal correction once an exponential bull is over. And corrections with Bitcoin are typically around 80%. Well, a correction from current levels, 80%, well, that brings us down to 25,000, and that is somewhere here at the breakout level of the pattern. Now, these are the scenarios, and the patterns will actually tell us what the market will do. The patterns tell the story, and I've talked about the pattern signal here, what we're looking for, and if we get an entry triggered, well, that basically tells us that we should see a bullish scenario, either A or D. Well, I've promised to show you an explosive altcoin chart at the end. Well, let's do that now. I've plotted here all altcoins together except Bitcoin and Ethereum. These are all, it's a whole altcoin market. And it's actually interesting how the patterns are fractal. Well, we can actually see here, this is an S2 futures pattern you see on the weekly chart, and on the monthly chart we see another S2 pattern. So what we have is an S2 weekly within an S2 monthly. And this is the momentum move, and our target is projected way up here. That means that if we break to a new high, this would be the entry, this is the stop, this is our flash crash bar, then the target becomes a 33-fold of current levels. Well, that would be an altcoin explosion, and that would be altcoin season we're still waiting for in this exponential up leg. However, if it cannot break to a new high, and most probably it will not, this is why I've put here the note of caution for altcoins. If it cannot break to a new high, well, then the target becomes the start of the momentum move, which is down here, which is around 30,000 level. That would mean from current prices a 97% meltdown in the market cap of altcoins, excluding Ethereum and Bitcoin. So if that happens, well, that would actually mean that a lot of altcoins will not survive. We'll see just a few that will prosper, and you want to be very cautious, not accumulating and apply an exit algorithm that keeps you out of such a big drawdown of 97% over a couple of years, obviously. But this is the note of caution. We could see an explosion to the upside, a 33-fold of the index, or we could see an explosion to the downside. Well, that might take a few years to get there, but be careful. So always do your own due diligence. Watch out at the important levels of Bitcoin and Ethereum, and watch out what this altcoin chart is doing.